All right, so today we're gonna do stock market for beginners. That's what we'll be talking about today. This is something that a lot of people have been asking me to discuss, so I said, why not? So stock market for beginners. So we're gonna do that. Let me put my timer here. Stopwatch. Okay, welcome everyone. Welcome. I thank you all for being here. For those who are watching, for those who are tuning in, welcome to our Money Talk. So today on Money Talk, we're gonna talk a little bit about the stock market. I've been having this question so many times. So many people have been asking me to talk about the stock market. Money Talk, we're gonna talk a little bit about the stock market. Sorry. Yeah. So there you go. Yeah, so we're gonna go into our subject today. Thank you everyone for joining us. We thank you all. Our series has just begun now. So we're gonna begin. We're going to begin and we're gonna learn a little bit about the stock market. There's a lot of things to learn and we can't, I really can't do everything today because this is such a huge subject. But we're going to do a little bit. We're going to do beginners, just a little beginning to help us understand what exactly is the stock market. Now, like everything in life, there is risk in everything you do. So, in the stock market, there's risks, right? So, nothing is risk-free. In fact, in French, there's a saying that goes, qui ne risque rien, n'a rien. That's what the French people say. Qui ne risque rien, n'a rien. Why talking about the stock market? Because a lot of our community has no idea about how the stock market works. Like there's people who have no idea at all. They have no clue how it works. And I said, you know what? I want to help our community. I want to help our community to understand a little bit about the stock market, to understand how it works. In fact, all the richest people that you know today are all in the stock market. Everybody that you know is rich is investing into something, right, in the stock market. So it's very important to know about the stock market, right? So I thought, you know what, let me do my research and let's talk about the stock market. And someone can say, I actually had someone write to me and say, what makes you qualified to talk about it? Why you? Why you? And I said, okay, well, I've been investing in the stock market for 15 years. Right? I have stocks, I have mutual funds, so I kind of have an understanding on how it works, right? That was a good question. The person was trying to be a little, but it was a good question because, and I said, I think I can talk about stock market or mutual fund or investing because I've been doing that myself, right? So, and I want to help our community in general about this subject. So from the get-go, we're going to talk about different types of stocks, different types of shares, and all that stuff. So please tune in because this is going to be an interesting show. It won't be too long. We're only going to do 25 minutes, the most 30 minutes today. So I'm going to get into it, right? So we're going to get into risk first. So stock market has risk. Like anything else, there's risk, right? So there's risk of losing your money, right? So that's why I want to urge anyone who's watching us tonight. If you are planning on investing in the stock market, you need to do your research. You need to take time and learn about what you want to do, right? There is obviously money to be made, but there's also risk of losing your money if you don't invest in the right things. So I want to encourage all of you guys to invest, learn to become investors, right? There's a saying that goes that savers are losers and cash is trash, because when you put your cash in the bank, inflation eats your cash. So learn to invest, learn to get into the stock market, learn to educate yourself about it. 2020 has been a year of self-education for a lot of people. Get to learn things you didn't know, get to adjust, to a few things. So I'm gonna first start by talking about risk. So what is risk? Right? People ask, what is risk? So risk is the chance that you actually, risk is a chance that your actual income, your actual outcome will differ from your expected outcome, right? It's a chance that your actual outcome will differ from your expected outcome. So it means when you're planning on something and something else happens, right? You are thinking you're gonna make money and then you lose money. Or you're thinking you're gonna lose money and you make money, right? Those are risks. So there's different types of risk, right? So I have my notes. I wanna go through my notes. So please just tune in. So, so there's risks that include change or losing some or all of your investment, right? So there's a chance that you can lose your investment, right? As an investor, you are rewarded for taking a risk. So now there's a good side to it. There's good risk. And you as an investor, when you decide to go in the stock market, you are rewarded to take that risk, right? That's why you get paid. That's why you get, your stock are performing well. If you did your due diligence, you studied what you want to invest in, you study what kind of stocks you want to buy, there is money to be made. There is market risks. Right? So these are different types. I'm gonna just touch on risk a little bit because it's very important to know the risk. It's not all rosy. It's not all, beautiful. There's risk, and I'm gonna explain a few risks here so we have an idea. There is a market risk, right? So economic development and other events, right? So sometimes the market crash. There's people who were old enough. I remember in 2008, there was a huge market crash. People lost billions of dollars. The housing market crumbled, right? So those are kind of risks that happens when you get in the stock market, right? So there's risk obviously in the stock market, right? There's liquidity risk, where you buy some stock and you can't sell them, right? You can't sell them. You just have to keep them, right? So there's that type of risk in the stock market. There's also inflation risk. So inflation is when the cost of living keeps eating on your profit, right? So that's also inflation risk, right? So there's different types of risk, but the stock market obviously has risks. So I'm gonna encourage everyone, before you get in the stock market, you need to understand what types of risk you are getting into. But there's also obviously rewards, right? I love the stock market. I love learning every day. I love, looking at these stocks performing how. I love looking at this company, buying this company. We'll get into that eventually. So, I personally, as I said earlier, I have been in the stock market for 15 years, right? I have had mutual funds, I've had stocks, I've had, different types of investment here and there, right? So I kind of have an understanding on how the stock market works, right? And I encourage everyone to do their thorough research. 2021, by the way, is the best year to get into the stock market than ever. 2021 is the best year to invest. Why? Because there is a lot of companies that will let you invest for free. You can buy stocks and share stocks for free. There's different free platforms. So if you go to my YouTube channel, you're going to see. So there is obviously a lot of app. Like for me, I personally use Wealthsimple Trade. It's an app I use. It's free to use. There's a link actually on the bottom of this video. There's a link. And also on my YouTube, there's a link also to see how you can get into investing in the stock market. So Wealthsimple Trade is very easy to use. Actually, I'm gonna show. I have my wife's phone here, so I will show you guys how to do it. Right? It's very easy to do. So I will show you guys how to do it. Right? So why invest in stocks? So stocks has been one of the best tools to grow your wealth in human history. One of the best tools to grow wealth. Everyone who's rich, almost everyone is in the stock market, right? All the billionaires. In fact, there's one guy I'm sure some of us might know. His name is Warren Buffett. He's like the investor of investors. He's like the king of investing. Warren Buffett is in the stock market, right? Bill Gates, Jeff Bezos, Elon Musk. All these multi-billionaire people are in the stock market. So it's very important to learn about how to create wealth. And one of the tools you can use is the stock market. So you need to understand how it works. Putting your money under the mattress will not give you anything. Saving your money in your bank, in your savings account, you are going to lose because inflation will be eating on your profit. So you need to learn about investing. You need to learn about the stock market. You need to learn how the market works in order to prosper, in order to grow your wealth, right? Stock market on an average for the last years gives you about 10% ROI, right? So ROI is return on investment. So ROI is return on investment. So the stock market has been very good over the years, over the decades. It's been solid in gaining, in raising money, in gaining, you invest something, it grows. On one of my first video, I said, there's two types of interest, right? There's interest you pay when you borrow money on a credit card. There's interest you pay on a loan, right? On Visa, on MasterCard. That's a penalty. And there's also interest you earn, right? On your money. There's interest you earn on your investment. That's called reward. That's reward when you earn money when you earn interest on your money, right? So it's very important to understand what kind of interest you want to earn, right? So my sister Stephanie, I think, posted something that there's two types of payments. There's the payment you make and the payment you receive, right? So you have to learn, you have to be smart with your money. This whole show is about teaching our community how to become smart with your money, how to learn to invest your money, how to learn to put your money somewhere where it's going to grow. The checking account and saving account is not where you put your money. If you start learning to invest slowly, I can guarantee you 10 years from today, you will have a lot of money. I said in my first video, on an average, my investment this year, it gave me about, I think my statement that came, I earned about $5,000 interest on my investment. So that's money that grew on top of my money, right? So it's just to say, the more you invest, the more money comes back, right? So please learn about investing. And if you're on this video, please share this video with your friend. Share this video with somebody because we're going to learn a lot of things in a very short period of time. If you have someone who's inquiring about stock market, who wants to learn about investing, show them this video. Share this video with them, or go now our YouTube page and subscribe so you can be seeing these videos. I do Money Talk every Sunday at 7 p.m. So now, I said stock market is one of the best. So you don't have to be a genius to get in the stock market. You don't have to be a genius, my friend. All you have to do is just do your homework, self-teach yourself, self-educate yourself, do research. And if you know somebody you can talk to them, right? It's cheaper for you that way. And we'll get to you why it's cheaper to you that way. So there's different companies you can invest in, right? For example, I'm going to give a Canadian company. For those who have been watching news, the Canadian Pacific Rail, right? CP Rail. CP Rail is going to become one of the largest railway companies in North America. In fact, CP Rail is buying another company in the US called Kansas City Southern. So the two railway are going to combine forces. They're going to be purchased by CP Rail, and it's going to have it's going to be for the first time in history, a train will leave Mexico and get to Canada. So it will be Canada, Mexico, and the US. So that's huge. So CP Rail, right now, a share of CP Rail is about $400, right? It's about 400 something. I'm going to get in here so you guys can see. Today I want us to do this live so we can be able to interact together. Right, I'm gonna go on the app that I use. So this is the phone of my wife, by the way. So this app here is called Wealthsimple Trade. That's the one I'm talking about. So this is the one I use. It's a free app to use. Please educate yourself on how to use it, or you can ask me. There is a link below this video on how to use how you can get a $10 free. So now I'm gonna open this application. Right, so I was checking what app is this? I was checking here. So now we're gonna search for CPRel. I just want to show you how this works. Right? So I'm in the app. I'm in the investing app that we use. I have one on my phone, and this is my wife's phone. I put one on my wife's phone too. So now we're gonna look for CPRel, right? So so Canadian Pacific Railway. So it's the top one there. I don't know if you can see. It says CP. So we're gonna click on that CP here. Boom. Right? So it will give us that price. I don't know if you can see there. So right now CPRel is worth per stock. One stock of CPRel is $474.27. $474.27 is a share, one stock of CPRel. Right? That's the price right there. I wanted to be interactive today on what we are doing. So now, before you buy stocks, right? So this CPRel, right now, this is the price. I can guarantee you that once this deal goes through, once CPRel buys the Kansas City Southern, and the price they're paying for it is, CPRel is buying it for $25 billion. So CPRel is buying this Kansas City rail for $25 billion. So CPRel right now stocks, as we saw, is $474. I can guarantee you that because the deal is going to take effect in 2022. I can guarantee you that CPRel, by the time this deal comes, because it's going to become a huge company, this share that's today, right? This share that today is $474. In the next year, mark my word, in the next year, this share will be around $700 to $800. So for those who are watching, keep this video, you're going to see what I'm talking about. So if you have money to invest, this is the time to buy CPRel stocks. This is the time to get into investing in that company because it's going to grow, right? So we have another merger that happened in Canada, and that's Rogers. For those who are watching, when you get into investing, you have to read newspapers, read business, watch the BNN show, go YouTube. You have to find resources to teach you more about investing. They want you cannot just be buying stocks, buying shares for just like that. You have to do your homework. So Rogers has bought, is planning to buy Shaw Communication, that the one we use for internet and all that stuff. Rogers buying Shaw for $26 billion. So right now, if I show you that too, so you can understand what I'm talking about here. So we're gonna see now Rogers. How much is Rogers stock right now, right? I'm doing this to teach people who don't understand how stocks works. So I'm in the app, on my investing app that I use to buy shares and buy stocks. So we're gonna see Rogers. So Rogers on the TSX, Rogers trade on the Toronto Stock Exchange. So there's two biggest stock exchange in North America. There is the Toronto Stock Exchange, and there is also the New York Stock Exchange. So Rogers is right here. It's called Rogers Communication Inc. So that's Roger, right? So you can see now the difference. So Rogers Communication, one stock of Rogers is $60.58. $60.58. So once this deal also, once the merger from Rogers and Shaw goes through, Rogers will be worth, this stock will jump maybe to $100 or maybe $200. So the time to buy your stock is now. The last time I said, the best time to plant a tree was 25 years ago. The second best time is today. Right? So learn more about stock. This is how you're gonna become wealthy. This is how you're gonna learn how to invest your money. Share this video with your friend. Thank you, Mama Esperance. I love you very much. You're my favorite lady in the whole world. So Rogers, CPRel, a bunch of companies, they do this all the time. So we're gonna talk now. So price of stocks change, right? Stock market change. It fluctuates. It's like a wave. So there are stocks that goes up, they go down, they go up, they go down. But eventually, the stock market always go up. At the end of the day, you have to do your homework. You have to learn about how the stock market works. Right? So I really I'm so excited to encourage everyone. And if you have a question, feel free to contact me. I would love us to talk about it. I like to talk to people about money. For me, if you want to make me stay with you on the phone a long time, talk to me about money. Let's talk about money. I don't want to be talking about gossiping. I don't want to talk about, other people's business. I'm interested in talking about money. So I can help you if you don't know how to invest, how to buy stocks, how to buy shares in different companies. I can show you. But that's kind of my favorite subject to talk about. I'm not into so there is different types. So I want to now get into again, more into our things. So there's different examples I show there. Shaw is being purchased by Rogers. CP Rail is buying Kansas City Rail for about $25 billion. So companies all the time, merge. There's mergers. This company buys this one, it becomes bigger, it becomes powerful. Right? As I say, Rogers is buying Shaw. This CP Rail is buying the Kansas City Rail. It will become one of the biggest rail company in North America. They will be having train from Mexico, US, and Canada. This is the first time, So just so you know, there's different category of stocks. So I hope you're listening because this video is not going to be long. I'm going to be going through very quick. There's different category of stocks. So there is large cap stocks, right? And small cap stocks. There's large and small. So the market cap is outstanding shares and the price, right? So the large cap stocks are those companies that are valued at $10 billion or more. So like Rogers is a large cap company. It's worth $10 billion or more. There's more companies that are worth $10 billion. Walmart, Apple, right? All of you guys who have iPhone, right? So that's a very, very large stock company. So the difference between this and the small cap companies, these big companies that are worth 10 billion or more have shown a proven track record of stability over the time. Right? They've proven that these companies are profitable over the time. It's been a long time. They've established themselves. They're kind of the leader of the industry. Right? Proven track record over many years, frequently offer dividends. Most of these companies, sometimes they offer dividend. We're going to talk more about that. And now we have the mid-cap stocks. So these caps are about $2 billion to $10 billion. The mid-cap companies are $2 billion to $10 billion. Right? So usually they have higher dividend. They're typically younger and are seeking aggressive growth. Right? So concentration risk is there. So so you have to understand those kind of terminology. So those mid-cap stock company, they are usually $2 to $10 billion. Right? So these are usually newer company, right, that are seeking aggressive funding. Right? So, there's a lot of things here to talk about. So now I'm going to talk about different types of stocks, right? So there's growth stocks, right? So these are growing stocks. They're also mainly for companies that have been there for a long time. There is the Facebooks, the Microsoft. So I can show you another example. So I'm going to show you another example here. For example, Microsoft, right? So Microsoft is one of the biggest, more lucrative companies on the stock market. Microsoft, Tesla, and I will show you a difference here. So I'm opening again my investing app here, and I'm going to show you guys Microsoft, how much Microsoft is worth per stock, right? So yeah, so there's different companies, so you have to learn to look at them. So let's say Google, right? So now you can see a company like Google, right? So Google is worth $2,000 a share, right? $2,000 a share. So this is a big company. And now when you look at, let's say Tesla, that's another one, or Amazon. Right? A lot of you guys buy a lot of things on Amazon, right? So Amazon is a giant on the stock market. Amazon is worth $3,000. That's the price right now of Amazon. For somebody who bought an Amazon stock on Friday, they made $47 just Friday on Amazon stock. So I'm just trying to show you guys different types of stocks and how much they're worth. But if you have money to invest, if you have, let's say, $200,000, you can invest in Amazon, because that's a very lucrative company. But start small. Start buying these small stocks. Now, in order for you to achieve the goal you want to achieve, you cannot just buy one share and say I'm done. You have to buy around 2 to 20, right, shares in a certain company in order to make money, right? So we talked about risk. We talked about risk there on the risk of investing in the stock market. We also talk about reward, right? There's reward. There's income. There's different types of stocks too. There's category of stock. There's growth stocks, as I said. These ones offer no dividend. Amazon, Facebook, Microsoft, Tesla. These big companies. They are one of them. They have big potential for growth. Now we have income stocks. Right? Income stocks have proven track record and business model, consistent income and dividend, right? In these income stocks, right? And then we have now the last is the value stocks. So these value stocks are trading below its fundamental price. So the value stocks are it's like someone finding gold, but it's in a mud, right? So you need to clean it up for it to shine. So these are stocks that are overlooked. Maybe it's a newer company, maybe it hasn't established itself, but it has a potential for growth, right? So 5 years ago, 6 years ago, Tesla was worth maybe $100, right? Five years ago, Tesla was worth maybe $100. But right now, if I want to show you, right now, Tesla is worth how much? So for someone who, saw the potential of Tesla, 5 years ago, so Tesla right now is about $654. That's Tesla right now. But about 5 years ago, it was only maybe 40 or $50. But it keeps growing, right? So it became very, very valuable, right? So there's these value stocks. They are cheaper usually. They're cheaper. They're trying to break ground. So if you are smart, you can buy in that company, and eventually you're gonna grow your money. So it's all about doing your research. And the stock market is not for the genius only, right? Anybody can join the stock market, right? We talked about the risk there. We talked about all that. So now I'm gonna now speak about individual stocks, right? So I have individual stocks, right? I buy a lot of individual stocks. So let's say I have stocks in companies like Shaw, right? I have stocks in company like, all the major Canadian banks, right? So like there's a TD Bank, there is RBC, there is Scotia Bank, there's BMO, all these Canadian banks. So they're always profitable. Banks always make money. I don't know if you've noticed, if you've gone to all the major cities in Canada, the biggest, tallest buildings are owned by who? They're owned by banks. Banks, they have so much money you have no idea. They always make money, right? Banks' business model is making money, no matter what. So, if you are an investor, you'll be like, wow, these guys, they charge you fee to take your money out of the ATM. They charge you fee for this, fee for that. So these dudes, they make money. So if you're smart, what I would strongly suggest is what? Buy some bank stocks. This is a free advice I'm giving everyone. If you have money, buy some bank stocks. Right? If you have money, buy the Canadian banks. Buy BMO, RBC, TD, and Scotia Bank. If you buy, let's say, $1,000 worth of Scotia Bank, for example, or TD, $1,000 of that stock, or BMO, in 1 year, that $1,000 you bought today, in stocks, will turn into what? Will turn into maybe 1,300 or 1,400. But if you take that same $1,000 and you put it where? You put it in your bank, in your savings account. it will grow to maybe $1,001 or 1,000 maybe $5. You're gonna gain $5 in your savings account. But if you do it in the stock market, you're getting hundreds of dollars, because those stocks are always going to go up eventually. And also, the stock market is not something you do for just today. Like it's not like a saving account or a checking account. It's not you buy stocks today, you sell tomorrow, unless you want to be a day trader. But usually the stock market is something you do what? You buy stocks and you hold them for a while, for a longer period of time, long investment goals. Then you're gonna make money, right? So keep that in mind also. Another thing I'm gonna talk about is what? I'm going to talk about we're talking about individual stocks here. So types of stocks. There's types of stock. There's individual stocks. There's mutual funds. I also have some mutual funds. And I really do beg everyone watching this video. If you're watching me, if you are listening to this, please start investing. Start investing your money. Tomorrow, you're going to be very happy. You're not going to regret it. You know, putting your money under the mattress, putting your money under your savings account, under your checking account, it will not give you anything. Invest your money. Learn about how the stock market works. The richest of the richest are in the stock market. All right? You want to be rich? You want to create wealth for your family? Invest in the stock market. Get some mutual funds. So, types of stocks, right? There's individual stocks, which you can buy individually, like bank stocks, telecommunication, energy. You can buy these stocks individually. There is also mutual funds. So mutual funds, what are they called? So mutual funds are a pool of money from the public to buy securities. Individual stocks, they just like, you're buying one stock by stock. They are good because they reduce fees. Usually when you want to invest, you have to get an investment manager. You have to go to these investment firms, investment companies, and you pay somebody to invest for you. You pay them a fee, right? But when you do your own investing, you don't pay that kind of fee, right? So I'm gonna give now a little difference. Merci beaucoup, Aline. So individual stocks, you buy them differently. Mutual funds, usually mutual funds are accessible at your work. You can also buy them in the market, but usually for those who are working, you can go see your HR at your work and you can invest money in the mutual funds. Every time you get paid, they will take out of your paycheck and they will invest for you. Now, this way, you are paying fees because someone is investing your money for you. I said I made about $5,000 in my investment, in my interest on my investment this year, but I look at my statement, somebody took $2,000 in fees, right? So that could have been $7,000, but I got only $5,000. So you can see, but over time it grows. Doesn't matter that much. So it's always better to be an individual investor, because then you're not paying those fees, right? So, and you just have to learn about what you're doing. Now there's index fees. So I'm only going to talk about the individual stocks, mutual funds. So the pros of mutual funds is that mutual funds, as I said earlier, it's a pool of money from the public to buy securities. The pros of mutual fund is there's high liquidity, right? They're diverse, professional and active. Professional, they give active versus passive income. Lots of option, right? In the mutual fund, you can buy mutual fund in anything, right? Different. They are very option. They're very balanced, right? They're balanced, fixed income. They invest in money market and all that stuff. Now the cons of mutual funds is the higher fees, right? Because mostly they are run by somebody. So you are paying fees for someone to do the investing for you. They usually sometimes higher fees, depending, right? Higher fees. They are not insured by. I'm trying to remember. So in Canada, there's is this CDIC that protect your money up to $100,000, I believe, right? So in the US it's FDIC. In Canada I think it's CDIC that protects you up to $100,000 in the bank. So the mutual funds, they don't have that. Meaning if the market crash, you lose your money. So basically like that. They have large cash holding, which is not good because cash is trash, really. Right? So it's good, to invest more of your money. they are hard to evaluate, so it's really hard to know. And now the other ones that I'm gonna also suggest are ETFs. I cannot spend too much time on one because we have to get moving here, and I time myself. I'm timing myself here. I want to finish this video quick. There is also ETFs. So ETFs is like a basket of the big stocks now. So now ETF is what? ETF is like all the stocks, sometimes they combine them together. So you can find, let's say, telecommunication stocks, like all the telecommunication, like the Rogers, the Bell, the MTS, all those stocks. So instead of buying, let's say, from one company to another company, the ETFs combine all those telecommunication stocks into one stock, into one share, right? So they're easily, so when you buy one, you are in the pool of all that telecommunication. When you buy a stock, let's say in the banking, you buy one share, but you are in all the major banks. That's the good thing about ETFs, right? So you are in the pool of all in that sector. So you're buying a sector. So now there's also another thing called REITs. REITs, R-E-I-T-S. So REITs are real estate investment trust. Now there's a story about REITs. So before the market became accessible to the local individual like me and you, the average guy. Before the market was available and accessible to us, only the rich people will be investing in these REITs, like in these real estate investment trusts. So now, instead of, let's say, there's someone who owns a house. This is an example I'm gonna give. Somebody owns a house, and they are paying, they're the landlord. And the tenants are paying rent, right? Those tenants are paying rent, so you are getting money, right? You're getting passive income because you're getting some money from your house. Now, REITs are like, you don't own a house, right? You don't own a house, you're not a landlord, but you're like the super landlord because you invest in the fund that all the housing market, all the rental properties, right, are in. So you also, like you take the best of the best. So you're gaining money from those investments when you're in the REITs. Now I'm gonna give you it's income producing real estate, right? That's basically how it is. Income producing real estate. So you're also in the real estate without having real estate. You're in the real estate without having a house. That's how REITs work. Right? You're getting the money from the market on the real estate market, right? So the pros of the REITs are the access to historically inaccessible class. They have high liquidity, stable cash flow through dividend, right? They're stable investment, and they historically stand asset class, right? So cons is dividends are taxed at a regular income, subject to market risks, economic risks, like we had in 2008. They're hard to evaluate, these REITs. Financial ratio when buying stocks, balance sheets, and all that stuff. So when you want to buy a stock, this is our last point because I'm going to conclude this video. I didn't want to have a very long video. So when you're buying stocks, which I strongly recommend, anyone watching this video, please get into investing, get into the stock market, get into pushing your money far. When you're buying stocks, there are things you need to understand. There are things you need to look at, right? You need to look at the companies you're buying into. Valuation, right? You look at the company, how much this company is worth. How much is this company? What is this company? How are they doing? What's their track record, right? On this app that I do, if I can open it up one more time, if I show you, it shows me, it will show me here for 5 years how this stocks has been performing. Right? So you see Tesla. So this is Tesla here, right? As I showed you earlier, this is Tesla. It's $654. So this app, it will show me, that's a kind of work you need to do before you buy a stock. So it will show me 1 month ago, how much Tesla was worth and how it performed 1 month ago. 3 months ago, it will show you 3 months ago. It will show you 1 year. 1 year ago, how Tesla was performing. You can see somebody who bought Tesla stocks 1 year ago today, they would have made, if you bought 1 share of Tesla 1 year ago, you would have made $568 Can you imagine that? Can you imagine that? Just put that in perspective. If you bought this, if let's say you bought 20 shares of Tesla 2 years ago, 20 of them, today you will have over $4,000 in profit. Because they tell you 1 year ago, Tesla made I don't know if you can, let me see. Okay. I don't know if you can see. So here, so I don't know if you can see that. So it shows you here Tesla, over 1 year ago period, it made $653. Right? So someone who bought a stock in Tesla a year ago would have made $653 in profit. That's what I'm talking about. If you put your money in the bank, how you cannot make for a stock of $600 to make another $600 in profit? No, you cannot. Right? $500 profit. You cannot. So that's why the stock market is very, very important. So the app I'm using is called West Simple Trade. If you go on my YouTube channel, my brother Isa, on the YouTube channel, under the description, you're going to see where you can click and you can start buying stock for free. Right? And also you get $10. If you use my link, they give you $10. So it's very important for you to go on my YouTube channel or on this video. There's a link somewhere. Click on the link and you're going to get free $10 to invest. This is what I'm talking about, right? I'm not inventing this. So I'm showing you exactly that Tesla, if you bought one share a year ago, today you would have made $500 in profit. Right? Isn't that great? So now I'm showing you the value of investing in stock. So let's say someone had $5,000. Let's say you had $5,000. And then you decide that I have $5,000, I want to buy Tesla. Over 1 year ago, let's say a year and a half ago, you buy $1,000 or $5,000 worth of Tesla shares. Today, my friend, that $5,000 of yours will be $15,000. $15,000. Right? So you can see how stock market is the way to go. I want to educate our community. I want our community to really, really, really learn about investing. Do not put your money in useless things. Learn to please learn to invest in stock market. This is the future. I said on my last video, I made $5,000 profit in stock market this year alone. So in next year, that will grow because I continue investing. All right. So please, I beg of you, anyone following me, anyone listening to me, if you're going to forget anything I'm going to say, right, remember that investing. I cannot talk about everything. I have so many notes here, but I cannot talk about everything because time is running and we're out of time. But I hope you understood a little bit in the difference of stock, individual stocks, mutual funds, ETFs, right? ETFs, REITs. I hope you have a little bit understanding on how that works. So tune again next Sunday at 7 p.m. We're going to have again Money Talk. Please subscribe to our YouTube channel. Share this video with your friends. It will help someone. We need to wake up as a community. I said the last time, rich people tell their money where to go. Rich people don't wonder where their money went. They don't wonder where their money went. They tell their money where to go. We have to wake up as a community. We have to be smart. Right? You can lose money in the stock market. That's true. As I said earlier, I gave risks. Right? So you lose money when you didn't do your homework. So the stock market is not like the golden thing. You can lose money in the stock market, but if you did your homework, you will make money. Because billions and billions and billions of dollars are people making money every single day in the stock market. Right? So I'm just suggesting here, please learn to invest in the stock market. Learn to invest your money. It will go far. You want to create wealth for your family. You want to create wealth for your generation. Invest. I started, my brother Dan. I started with in the beginning of the video. You came a bit late. I did talk about the risks in investing in the stock market. But you see, qui ne risque rien n'a rien. That's what they say in French. Those who don't risk anything will have nothing. Do not be so much afraid of risk. Because leaving your money in the bank
might look like it's safe, but you are losing it through inflation. Inflation is eating your money. Inflation is 5 to 3%. If you're getting anything like there, you are losing your money. So you might as well put your money in something that has been proven. And I said earlier, his stock market is one of the best tools to grow wealth in human history. This is not just me saying. Every single rich person that you know is in the stock market. And it's not about education. You don't have to be rich. In fact, I'm going to say something. I did a research, and I have a little boy who was arguing with me one day about, education and this and that. 60% of the world billionaires, 60% of the world billionaires, they don't have a university degree. 60%. The majority of the richest of the rich don't have a university degree. They're just smart. Be an entrepreneur. Learn to invest your money. Investing will make you rich. I said earlier, if you have been investing $100 since you are 20 years old, by the time you are 60 years old, you will become a millionaire. You will have over $1 million in your account. So investing, stock market is the tool that will make you rich. You will work until you die and you will never be rich. You will work and then you retire at 65 years old. You are tired, you are sleepy, you will never become rich. But you can work, use your work as a tool to create wealth, right? Use your work as a tool to invest. Invest in the stock market. Invest in mutual fund. Invest in REITs. Invest in ETFs. Invest in things that create wealth. So thank you everyone for watching us. Well, we're going to stop from here. Tune in again next Sunday. We're going to have another great topic, right? Please invest. Tell your money where to go. Do not wonder where your money went. Avoid getting into debt. Stop credit card debt. Stop consuming what you don't need. Do not be buying what you don't need, right? Avoid showing off. It's not a competition. Life is not a competition. You have to have goals. You have to know where you are going with your money and what you are doing with your money. And tomorrow, your future, your kids are going to thank you. Please create wealth. Create wealth. Stop this life of competition. Stop this life of showing off. Nobody really cares. The people you're really showing off to, they don't even like you. So be smart with your money. Invest your money well. Learn about stock market. I mean, if you have any question, anyone watching, please contact me. I have a link on my YouTube channel under Baraka Mulimbwa. You can click there, subscribe to our channel, share our channel with your friend. It's all about teaching others. We are all learning. We are all learning about these kind of things. So please, I thank you all. Thank you for watching, guys. And as always, be smart. Tell your money where to go. Thank you very much. Bye-bye.